Hello and welcome to the look ahead for Wednesday, the 16th of October, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, tomorrow we will be looking at inflation data from the UK. ECB President Christine Lagarde is also due to speak. In the US session, we have US trade data, API oil inventories, and earnings season continues with Morgan Stanley under the spotlight. So let's just kick off with UK inflation data. Expectations are for consumer prices to ease back below the Bank of England's 2% target level to 1.9% year on year, down from 2.2%. The data comes after we saw the UK unemployment rate slip unexpectedly to 4%, down from 4.1%, and wage growth eased to 4.9%, down from 5.1%. So we know that wage growth is intrinsically linked to service sector inflation. Now, service sector inflation and wage growth have been a little bit on the sticky side for the Bank of England's liking. And they've said that they want to see those levels come down before they cut rates again. Now, obviously, we've seen wage growth ease. Will we see service sector cool as well? Expectations are yes, that we will. And as I said, headline inflation as well as core inflation as well are expected to be cooling. So that would suggest that inflation is on the right trajectory for the Bank of England to cut interest rates again when they meet in November. 25 basis points, but around being priced in by around 80% at the moment. So if we just take a look here, this is pound US dollar. We have seen that the pound has recovered from those lows of the 130.50 that it reached at the end of last week. It's now trading up at the 131 level following the data today. And also we are seeing a slight weakness in the US dollar after it's risen to almost a 2.5-month high against its major peers. Basically, we've seen the US dollar strengthen. As we've seen the US dollar strengthen, we've seen sterling also weaken on expectations that the Federal Reserve will adopt a more gradual pace to rate cuts. We also had Bank of England Governor Andrew Bailey say at the beginning of the month that, in fact, we can just even spot the candle where he said it. Here we go. That Andrew Bailey said that he would be that the central bank could cut rates more aggressively if the UK inflation data permitted it. So what we're seeing now is we're seeing sort of a slight consolidation between this 131 and 130.50, or I think it's actually 130.20 is the low there from last week. Also the October low. So sellers are going to need to take out that 130.20 in order to test the 130 level. That 130 level, as we've mentioned several times, is that key level to be watching. Below that, we get a lower low. On the upside, 130, 130.15, 130.30, that's the level to be watching. That's the 50 SMA. It's also the high that we saw from last week. So that's the level that buyers are going to be looking to take out in order to extend gains towards 132 and 132.60 on the upside. As I said, if we do get a break below that 130 level, that would produce a lower low, and then we'd also expose the 100 SMA and the rising trend line support at the 129 level. I'm just going to pick up now on the euro US dollar. As we said, we've got Christine Lagarde speaking, but it comes just the day before the ECB interest rate decision on Thursday, where the ECB is expected to cut interest rates. Again, we've got this falling off of the euro US dollar. There was a double top formation there as the ECB is expected to potentially cut rates more aggressively, whilst the Federal Reserve is expected to rein in the pace of, or expectations have been reined in for outsized rate cuts. Now, the euro US dollar has actually eased down to this level here. It's just around the 109 level, just testing. We've seen above, or just holding above the 200 SMA there. So that's the level. We've got a doji candle, so a little bit of indecision. We've taken out the 100 SMA and also come down below that 110 level, a pretty key psychological level. So RSI is below 50, just teaching on the edge of oversold territory. So just watch out there. But let's see how it behaves around that 200 SMA. If we get a break below that level at the 108.75, 108.80, then that could see bears pick up momentum as they fall towards this level here, which is around the 107.80, 107.90 level, which is the low from August. We're finding the 200 SMA holds. Next level on the upside for buyers to get above will be the 109.45, the 100 SMA, and above that we've got the 110. We really need to get a rise above that 110 level to negate that near-term downtrend that we're seeing. And just finally, we're going to take a look at oil prices because there has been some big moves in oil. So we had that recovery. As far as oil is concerned, we've got the inventory data out tomorrow, but we've seen these big moves with relation to what's been going on in China and also with relation to what's been going on in the Middle East. Now, obviously, the data, we saw the stimulus package from China. That's partly what we saw drive up oil prices, as well as the escalation of tensions in the Middle East. Failure to break above that 200 SMA, I think, was a bit of a warning signal. We're now failure to retake the 100 SMA as well when it rebounded higher. And now we've fallen straight back below this resistance zone that we've talked about, or support zone that we've talked about quite extensively, which is the 71.50 to the 72.50 zone. Basically, as Israel has said that it's not, or there are reports that Israel has said that it won't attack Iran's oil infrastructure. So if we just think that's part of what sent oil prices shooting higher, was concerns that Israel would attack the oil infrastructure, therefore broadening out of the war in the middle of the conflict in the Middle East could cause a supply disruption, and that doesn't appear to be the case. We've seen the risk premium come off oil, and that's pulled it back below that pretty key support level, now turning into resistance. Also, we've got those little bit of disappointment as far as the Chinese stimulus package is concerned. You know, there doesn't seem to be the sensation that it's going to be sufficient to do the jobs that it needs to do. So that means we've seen OPEC. We've also seen the IEA downwardly revise their oil forecasts for this year and next, again putting pressure on oil prices. So on the downside, I'm going to be looking out now for 67.60. That's the next level to be looking out for. If we get a break below that, then it's going to bring in that 65 level, which was the low we saw in September. On the upside, 71.50, 72.50, that's the area that buyers would need to retake in order to stage any sort of recovery. That's also the downtrending resistance that's dating back to July as well. So I hope you liked everything that we've seen today. If you do, then please do give this video a like. And for more videos like this, then please do subscribe.